U.S. stock market live for today. As you can see, AP News announced here just 45 minutes ago that the Dow drops 900 on weak jobs data, and there is a global sell-off. So, wow, that is a big drop, no question about it. And yes, news trumps technicals, and so the jobs data is very important. Let's look deeper into it, though, because that's not all. So if we shift over to CNN, we see, all right, why the stock market is suddenly freaking out. I love this. If you watched my video from yesterday, I talked about how a lot of the news outlets and so forth will use very emotional terms. Freaking out, not very formal. But that's okay. That's okay. I got nothing against that. They kind of are freaking out, actually. So, CNN, good job. So, okay, it's freaking out. I agree. All right, so this is very important, and they are absolutely 100% correct. Traders have long placed their bets on the Federal Reserve cutting rates in September, and Fed Chair Jerome Powell basically confirmed as much Wednesday. And that is something the market is very much looking at. So, 100% right. This is one of those big catalysts that is, huge. Doesn't come across or doesn't come along very often. So it's not announced yet. That's the key. Not announced, but little hints of it. And as they say next, which again, another good analysis, that rate cut expected in 6 weeks was priced into stocks which have been rising over the past few months in hopes of a cut. Rate cuts tend to juice stocks because they lower borrowing costs for businesses. They can help boost profits. So that is exactly the logic of it. If businesses pay lower interest rates, then they can borrow more money, they can invest more money in the business, and the business grows. So that is very logical. And then the other part of it too here is what they say that news, in this case the rate cut, was priced into stocks. So this is, again, we talked about this in yesterday's video. By the way, if you want to check that out, feel free to do that after this one. And we talk about buying the rumor, selling the news. So right now, it's still a rumor, right? We don't have the news of the rate cut yet, but we do have the rumor of it. And so they say that that rumor has been causing the market to rise in hopes of the rate cut. Okay, so far so good, but that's not all. We're not done yet. So what else do we need to look at here? Couple things. Let me show you. Very insightful. Here's an article from CoinGeek.com. Got to give credit where credit is due. Very interesting. They say since the Federal Reserve has raised its benchmark federal funds rate, okay, blah. Many have theorized the inevitable Fed pivot will rally risk on assets such as equities, real estate, crypto. Okay, and that's what we just saw in the last article. That's what they were talking about. But then this article brings up something very interesting. Robert Kiyosaki to Wall Street Bets community has discussed this at length. That let's just go up here, when, not if, the Federal Reserve must begin to cut the federal rate cuts back to zero, or they remain at zero for the greater part of 14 years, that risk assets, especially stocks. However, as one Wall Street Bets community member pointed out in their subreddit in 2022, historically, this is not the case. Very interesting. So let's take a look at that. And we've got a chart for that. And so they're going to put in percentage terms, which is great. I love that they did that. So here we had a Fed pivot, and boom, market S&P went down 36% after that. Also, Fed pivot, market went down 48% after that. I think there's another one in here. Oh, no. This one, Fed pivots, down 27%. Then we go up for a long time. Fed pivot again, down 51%. Another Fed pivot, down 58%. So it doesn't seem to make sense. But then here, this one was very short-lived, but still, market went down fast and furious, 35%. These are huge drops. So it seems to defy logic. And by the way, something else to look at here, that it's not a precise timing indication or indicator, if you will, a signal. But right here, so it came, the Fed pivot, the market actually started going down before, just a little bit before the Fed pivot, if you could see that. Same thing here. Market went down a little bit before the pivot. Here, right around the same time. Here, just shortly after here, right around the same time. And then again here, it's went up after a little bit and then went screaming down. So it's not a precision like a scalpel tool in your toolbox. By the way, if you do want my market timing indicator, you can get that at indicatorwebinar.com. I give that to all my viewers for free. Go get it if you don't already have it. And I'll give you the indicator and show you how to use it. All right, but we're not done with this tutorial yet. So that's that. Now let's look at the charts of where we are today. Here's what we got going on. So sure enough, S&P down, and this is what we pointed out yesterday, the 50 SMA, the green line. And we've been playing around with it, and this is what happens often. The markets will pause at these major support levels that everybody in their parakeet sees. And the PS is uncertainty. But obviously, eventually, it's going to bounce up or it's going to break through. So this time it finally decided to break through and we gapped down. And you'll see that a lot at these levels of uncertainty where the market will not just break through, it'll gap down. It'll gap down after a bunch of sideways action. It will just, boom, move dramatically. Now, here's the key, though. So with the Dow, we're right at the 50 MA. So this is another technique I want to share with you, is that don't just look at one of the major four equity indexes. The four major equity indexes for the U.S. are the S&P. That's the main one. That's the benchmark by which most people are measured on their performance. And then the Dow, the QQQs, and the IWM, which is the Russell 2000 small caps. You want to look at all four of those. And if those four markets are all moving differently, then we call that a bifurcated market, and that makes it a lower probability market to trade. So we broke through support on the S&P 500, but we did not break through support on the good old Dow Jones Industrial. In fact, we were above it, and now we have come down to it. So now we're at the support on the Dow. And since I mentioned the other two, let's look up those here real quick as well. All right, Qs have already been down below it. By the way, notice, and I call this relative strength between the different equity indexes. So with this one, we had already been below. We were not just hovering around the 50 MA like the S&P was. With the Qs, we were already below it, and then it came back up to it as resistance, and then we went back down. Okay, and then, so that's the most bearish of the markets from a relative strength point of view right now is the Qs. And then the IWM, the small caps, again, they're acting a lot like the Dow. They've actually been outperforming the S&P, outperforming the Qs, and again, we use that when we say outperform relative to the 50 MA. It's a good relative strength indicator, line in the sand, if you will, and boom, it's come down to the 50 SMA. And now notice also that today we're not even getting a dramatic move. Actually, the IWM, the small caps, are actually at this time, this is live, a little up. They're a little above where they opened, whereas the S&P is below where it opened dramatically. So we've got a little bit of a green bar here, but basically it's a neutral bar. Okay, but we still have that gap down. So we want to see all these markets, and this is very, very important, is that when you want to see that there's going to be a major move in the U.S. stock market, again, the U.S. stock market is not just one of these indexes. You want to look at all of them and get the big picture, the broad picture. So always look at those four, compare, and look for alignment and congruency between them. So again, last but not least, go ahead and get my market timing indicator at entryindicator.com or at indicatorwebinar.com. And by the way, if you go to indicatorwebinar.com, not only do you get the indicator, but you get a tutorial on how to trade it, all free for my followers, which is you.